and I'm worth $250,000 times 5. That's 1.25 on the long short.
Welcome back to the $100,000 to $1 million series in the public account. We had a pretty good day today, up $1,500. Obviously, you can see there's mixed sentiment in the market. This is right at the opening bell. It takes a dive and then recovers nicely throughout the day. Coca-Cola had earnings today, and they kind of set the tone and set the bar a little higher than Google did. Google had impressive earnings, in my opinion, and they got murdered, which is a scary sentiment going into Q2 earnings, because that sets a tone where Microsoft could have a pretty good report and still get hammered. Meta could have a pretty good report, still get hammered. But Coca-Cola came out and said, all right, here's a good report, and it went up. It got appreciated. So that's always good news, and it makes me a little bit more optimistic going into this earnings report. Tomorrow morning, we have SoFi earnings. Oh, the market's officially closed. It's 8 o'clock. So we have SoFi earnings before the bell tomorrow, and I think this is a huge one going into this whole tech earnings report, even though you call SoFi more of a fintech company. And we have a $38,000 position here. We're a little bit in the red, nothing concerningly. And I asked ChatGPT just kind of for giggles what it thinks, and it's saying an upside of 7%. I'm a little bit more bearish, I would say, than ChatGPT at this point. I would say that they probably have year-over-year growth. It's a growth company. I'm hoping they raise that guidance because that's what they got hammered on last year. They had great growth. They just didn't raise guidance. So we'll see if they're able to blow out the EPS and raise some guidance. Then they'll be super bullish. And the reason I don't sell out of this stock, even though I'm a little bit bearish on this earnings call, is because the stock is going to double. It's going to double. And I don't want to miss out on a 20% upside because I was scared of a bad earnings call. So we have a respectable position here at 40,000. And if they do have good earnings, say they do pop up 7% tomorrow, it sets the tone for the rest of the quarter where they could easily double in this quarter because of how underloved and oversold that they've been. Meta's probably the one I feel best about going into earnings. I'd say they have the Oakley partnership. They have the Ray-Ban partnership that's starting to pay off. And they now, said they're going to start competing in the cloud services. So we're pretty much even on Meta. We did reduce our position down to 56,000, and that gave us some buy power. We're sitting on a $60,000 cash position right now, ready to capitalize if one of these companies gets hammered after earnings. And I'm hoping that's Amazon. Okay, I don't want to badmouth, and if anybody's currently in Amazon, I wish you the absolute best. And that's one thing you have to remember with the stock market is you're only a spectator, right? I see a lot of people where they get attached to a stock and things like that, and I'm guilty of the same thing. But I'm just a spectator, and we'll see how it goes. I would love to buy back into Amazon, so if they get hit nicely, I will definitely bet the house on Amazon. And that was how we made a bunch of money this past year, was taking Amazon from $199 to $275, and we sold out of it. And luckily we did, because it would have been 4 months of dead money, and we'd have given back half of our returns. So I'm really optimistic about Meta. I've got mixed feelings about Microsoft. Okay, I would think that Microsoft has relatively good growth. I just don't think Copilot paid off like they thought it would, especially with how dicey it's been with OpenAI and their partnership. So I'm a little mixed on it. We do still have a $52,000 position, which I reduced down. I sold $40,000 worth of Microsoft this morning, and again, to free up more buy power and have a bigger cash position in case one of these companies gets murdered. The reason that I stay invested, even though I'm a bit bearish on the earnings, is again, this stock, if they report growth and greater EPS, this PE falls down into the teens, and that's extremely undervalued in my opinion. So I'd say the fair value on Microsoft is probably 650 to 700, and I don't want to miss out on a big bull run because I wanted to avoid a potentially red day after an okay earnings report. So I'm not saying the earnings report is going to be bad. I just don't think it's going to be the blockbuster thing that it needs to be. However, it could set the tone for the rest of the quarter and really get the ball rolling if it is a good report. Amazon, I've said it before, I've said it again. I think Amazon's really always a buy. As for the earnings report, if they slow that CapEx, then this stock shoots up aggressively, towards 300, perhaps into the 300s. I think it belongs in the 300s. I'm hoping that it kind of gets beat up a little bit and I can enter, but we'll see how it goes. And the capital rotation that I was talking about is really starting to take place. So you see Micron had a rough day, okay? Down almost 9%. They're bouncing back a little bit overnight. But you see a lot of these ETFs are trading sideways. So you see it's up about 0.2. If you look at the week, we're still red on the week. And even though Micron is down like 35, almost 40% from its highs, and that's just that reallocation in these index funds. You got to remember, index fund is a compilation of stocks. So if some are going down and some are growing, it'll stay flat, but it's just a reallocation of capital. And a lot of these Mag 7s just kind of take turns going on bull runs and bear runs. And if you hop on the right ones at the right time, then there's some serious gains. I mean, still on the year right now, we're looking at 43%, 42% past year. And so if you've been, following along since the beginning, you say, oh, he was just in the first episode, he was at 110. He's lost $6,000 in the past week. No, look at this. We have scalped $16,000 worth of profit in the last month selling out of positions. Look at Adobe. Adobe's up 5% today. We sold down Adobe. So the reason that you're seeing that is because Meta was up at 680. Now it's back down to 597. So that was bound to happen. That stocks fluctuate. That's what they do. I mean, you see it goes up and down. If it went straight, I wouldn't be making this video. I'd be at the Bibelos, over at Turks and Caicos or whatever they call it. Okay, I'd be on some mega yacht. All right. So this fluctuation is normal. We were able to scalp profits. So that way, if Meta does go back, which obviously it will, to that, that 690 range, that's that's about $9,500. So really, you have to look at it that way. We have made $16,000 this month in profit locked in. Okay, we have a $60,000 cash position right now. So yes, our portfolio value did go down marginally, but that's bound to happen. So there's two things that could happen in this report. We could easily shoot up with some bull reports to the 130 to 135 range, or we can get beat up down to the $80,000 range with $60,000 of buy power. That to me is music to my ears. That means I'm able to load the boat with cheap stocks and essentially ride them out to their fair value. So if that's the case, if we do get beat up down to below six figures, it could be 85. It could look scary and bad. It looks like $20,000 evaporated. But those are the times where you buy generational values, and that would be honestly awesome. So if we went down to 85, we load the boat, I could see us easily in the next year skyrocketing to 150, 170, 200 at that point, because those buying opportunities are where you make the money. Okay, you make some decent money when you sell stock and all this sort of stuff. The real money is made when you buy cheap. So if we do have a bunch of bear reports and it goes down, it's a terrible time and it looks grim for a second, to me that's where the generational money is made. So either way this goes down, I think we're in for a wild quarter. This is always where nerves are high. We got 4 huge companies reporting earnings this week, some in the next week, and we'll see how it goes. So, like I said, we could easily, by the end of next week, be at 130,000 minimum, I'd say. Or we can get beat up, and we load the boats, okay? And I have a positive outlook on the year, obviously. I would like to finish this year up, probably, we've got, 5 months left in the year. I'd say that we could pretty easily get to 140, unless we have that big pullback, and then, we could see 140, we could see perhaps by the year end, it could be at 200. That's how undervalued these Mag 7 stocks are right now. And, people are looking at these crazy little companies thinking, oh, this is my golden ticket. I'm telling you right now, the golden ticket is in some of these underloved Mag 7s. Because once they slow down the spend and this AI stuff starts to pay off a little bit, these stocks are shooting up. And stocks like Nvidia and Micron and all that, they're good for the time being, but there's going to be a big reset. And I think that we're already starting to see it. And I think that we're early in this, to call it like everyone says, the dot-com bubble, all this sort of stuff. The dot-com bubble was 1999. If we are in this sort of AI bubble, I would say we're in like 1997, right? We still have some time to run up before any sort of big crash were to come in. So we'll see how that goes. And honestly, at this point, at these prices, you really just can't go wrong. So whether this is a bull or bear week is a positive thing for us. And if it is, and it runs up to 130,000, 140,000, then we go off and we look for the next value stock. Odds are not all of these companies shown here are going to have positive reports and shoot through the roof. Okay, so one of them is going to get oversold, and we're going to step in and buy it. So we'll see what the portfolio does as far as its value. But sitting on this $60,000 cash position, I'm super optimistic for what the rest of this year has to hold. So thank you for watching this. I appreciate it. Subscribe. I'm trying to keep this short, and I will see you soon.